Hello, everyone. Good morning. This is Rahul Vadotkar. I am the host of this NITRUS Talks. Today, we have the honor of Mr. Subhash Sindhwani. Actually, we should say Wing Commander Subhash Sindhwani ji. He graduated from our college in 1970. Then he joined the Indian Air Force. Thank you for your service, sir. And he also went to NITI, one of the premier institutes of India. It is called IIM Bombay now, I think.
Yeah, that's
And
true.
he joined the income tax school when he came to US after retirement, and he didn't want to stop working, so he took training on income tax and joined a school, got a certification, and he is today going to talk about income taxes in the US. He also has founded a community college in India called Chanakya Community College, and I encourage you to check out their website. And so I think with that, I will open it to Subhash sir. Please take it away.
Thank you, Rahul. Thank you so much. It's a real great pleasure to talk to alumni of my own college. I feel always emotional, meeting our old friends. Even though we were distant apart in terms of time, but I guess we aren't so far away from heart with each other. So let me begin my first slide where I'm talking about the structure of a return. I have tried to present this conversation, and I'm quite sure there are several ways of doing it. But nonetheless, I thought that let me first present the basic framework so that everyone can come in. I do not know who all are here and what is the kind of visa status they have, but I'll try to cover the entire range of visa status that we are in. And subsequently, I hope to be able to interact with you all. In 2020, in fact, I filed returns of about 20 people from our college. That
Wow.
time I was working with a platform of NACHA. NACHA actually gave me entry on that. And then I realized that I wasn't able to, reach a much bigger thing. And I said, let me, get connected with some US company. So let's first look at the structure of return. So you all are familiar with the W-2. You all get your W-2. You have income details. You have there, what is the federal taxes which have been deducted there at source. You have your Social Security, you have your Medicare, you have uh, box 12A and you have box 14 in which various deductions are shown if the employer is deducting and depositing some funds. So you're familiar with W2 and you have one planning tool which is known as W4. So if you can plan your W4, then you have a control on it, W2 withholding. Then you have most of you have interest income, you have dividend income, you may have some other incomes like gambling and things like that. And many of you, I've seen that you have capital gain. So that leads to your gross income. So gross income is another term which talks about, you have active income, earned income, and passive income. And then in the gross income, you are eligible for standard deductions or itemized deduction. You can choose one of the two deductions. You can either go for standard deduction or you can choose for itemized deduction. It's up to you. You can choose what benefits you more. And from there, what's your taxable income flows in and your taxes due. What is the taxes you're supposed to pay? Which is again a question of, what tax rate is applicable to you. And then you have some credits. So all the people who are in US, IRS has a system of, giving credits for various kinds of situations in life. I'll be dealing with this issue a little later. And from there, you have taxes, what you have paid at source, plus the credit broadly. That's your payment. And taxes due minus your payment would, whatever taxes balance now or whatever refund is admissible to you. So that gets, paid to you. You have to file a return. Even though you may not be due to file a return, but to be able to claim your refunds, you have to file the tax return. So can we move to next round?
Yeah.
So a little bit of my background, Rahul shared with you. But I'd like to share one thing at least, that I acted as a coordinator, VITA, which is actually an IRS initiative to provide free income tax return support by the organizations which are approved by IRS. So I was a coordinator of this. I in fact recruited about 18 volunteers, in which there were a couple of at least one CPA was there, who was a member of my team. So unfortunately, this had to close down. My vision was to actually take Vita Westchester to the whole country, to whole USA, but for some reasons, it didn't work out. So now, getting on to the basic framework, it's applicable to all, whether you're a US citizen, you're a resident green card holder, or you're a non-resident. Non-resident. Most Indians who are on work visa like H1 and all that are treated as residents. Actually, there is a special provision in the income tax laws, and the students, they have a different kind of tax structure. So now, all the US citizens and residents, one thing is that they have to report their global income. You have to report your global income. Please get this straight. Many people do not report global income. Some of my friends don't do it. And they have been here for a very long time. But the law says that you must report your global income. Then you get credit for taxes paid in foreign country, or you can have foreign income inclusion. There are two different channels available to you. One is that you can claim the foreign, whatever taxes that you paid there, you can get credit for that. And the other one is that foreign income exclusion, where up to $120,000, you get the foreign income inclusion. There are different conditions which apply for these two routes. We will get into that later if anybody is interested to know that. Then non-residents can be treated as resident if you meet certain conditions. These conditions are known as green card test or substantial presence test. But in the case of our Indians, I found one person coming to me who had some difficulty with regards to dual status. He had come in the middle. So what is the kind of status he should have? Once a challenge was shared by somebody. Can you move?
Yeah.
So now, let me say it's a very complex system. It's a very large code. And Rahul very aptly said so that IRS, the Congress created the IRS code, but only God can understand this. Honestly speaking, even IRS commissioner was on record to say that I can't file my own return. It's so very complex. And then, but three good things I will talk about. It has a very robust reporting system. And a reporting system is very, very good in terms of, whatever is happening. It gets reported to you, it goes to IRS, so IRS knows all. I would think IRS is very fair and personal. Having experienced income tax regime in India, unlike last few years where it has become computerized to a very large extent, in India, the filing of tax was quite personal, and the tax authorities could really play a hell into you. I have suffered a lot, and I know a lot of people, who have suffered on that score. So we are here, W2 income plus interest plus dividends, capital gains, some other gain you may have, income you have, so your gross income. And as I said, you choose standard deduction or you choose itemized deduction, and then you get to taxable income. Can we move? Now, guys, if you find that I'm moving a little faster, you could slow me down. I hope you can hear me out. We are on the same page. But if there is any difficulty anytime, please let me know. So now, generally, whenever you get something, it is deducted at source. And then whatever you get salary, deducted at source. Your employer deducts your Social Security or Medicare. If you get some refund, if you get some income from somewhere, the federal taxes and state taxes may be deducted, but many times there is no deduction there. And then the credits, which are basically of two types, you have refundable ones and you have non-refundable ones. I would urge that you should be able to use all your credits, because that could be kind of a tax planning for you. So now let's look at the credits. You have earned income tax, EITC they call it. I don't think anyone would fall into EITC, because the limits, it's basically meant for low income group people, and there are certain conditions to become eligible to get EITC. I have a feeling that not many of you would qualify for EITC, excepting those who are very retired old people. They might qualify, but most people will not. Then you have child tax credit. This, I think, many of you would qualify. If you have a child who's your dependent, and if you meet certain conditions, then you are eligible to get child tax credit. Child tax credit is also refundable and partly non-refundable. You have then adoption credit. If you adopt someone, either from abroad or from USA, then there is an adoption credit which is quite handsome. It's something like $14,000. Then you have dependent credits. Sometimes, you have dependents who are dependents on you, and again, you meet certain conditions. To qualify as a dependent, again, there are, certain number of conditions. Here, I remember one case in which somebody came to me from Texas, and he was talking about claiming dependent credit for his mother, who was in B1, B2 visa. He was not entitled for it. So I told him, I cautioned him, don't commit this mistake. Somebody had actually, suggested to him. Now you have dependent care credit. If you are spending some money to take care of your kid or someone who needs dependent care while you and your wife is working, then you are eligible for dependent care credit. Once again, there are conditions here. There are a lot of conditions which apply to being able to claim dependent care credit, and there is a phase out for that. It starts it goes up to a certain income and then it phases out. So one thing good about the credits is that they all have a phase out period. So if you are earning a lot of money, many credits you may not be eligible because you might have phased out. Then you have savers credit. This is for the people who are retired and who are in low income range. They have a saver credit, and this is again, there is a certain percentage. It is not that whatever you save you get it. It's dependent on a certain percentage of savings and several other conditions which apply to this. Then you have PTC, premium tax credit, which I get it. This is for actually healthcare. I get my healthcare support from the marketplace, and I pay my monthly fee to them. And though my health cost is much higher, which is to a certain extent, paid to me by way of tax rates. So healthcare is actually a very, very major issue. Not many people understand the total implications of it. Many of you, who are employees in the companies are perhaps not aware of it because you're all getting it through your company. There is some reduction on the, healthcare, and you get it from the company, so you're not aware of it. You don't get into the PTC calculations, but many of us do have to get it. Then you have education credit. You have basically two types: American Opportunity Education, and then you have the lifetime credit. This again has phase out constraint. It's available to you, your wife, even your children, and for different types of AOTC is applicable to if somebody is enrolled for a graduate for a 4-year course, and lifetime is for enhancement of skill, and it may not be a 4-year course. Then you have foreign tax credit, which is, as I already talked about it. I missed out energy efficient credit, which is a credit which you get if you make improvements to your home and save energy. So this is, I think, many of you who have your own residences, you can look at this credit. If you could use, there are two savings to it. One is that you save your energy cost, and some expenditure that you incur in installing these items to save energy are paid for by the state. So this is a very interesting thing. It has happened only a few years back. Do look into this. If you have queries on this, maybe in subsequent talk I can cover this. Then you have EV credit, which is the available to people who own the cars, electric vehicles, which is available to you, which is as high as could be $7,500. And even on the old car, the EV credit is available. So look into these two. I'm sure the other things and the EV credit and the energy efficient credit, these two are very interesting areas of saving. And different people may have different kind of issues with their returns. So and the code is so complex and so large that we are learning all the time. Yeah, Rahul, can I have next one? So tax rate, as you are aware, is based on the kind of income that you have, which is and the standard deduction that you have for is actually dependent on the age. If you're a senior citizen, it goes down. If you're depending upon your filing status and physical state, I mean, some people who are blind, they get some special, or there are some other physically, who are not, who are disabled. So they get some additional deductions. Basically, we have these 5 types of filing status. Filing status decides, what is the kind of standard deduction you should have. So one is single, you have married jointly, married separately, you have qualified survivor qualified survivor spouse, and you have head of household. This may affect you. At least one person from India I figured out who was keen to file the return, though they were married, they were keen to file the marriage separately. But generally, filing marriage jointly is more fruitful. It's instead of joining, doing separately, unless there are very strong reasons to do so. I'm not going to cover injured spouses and some other issues where reasons of that. There are actually 2 terms where the spouses can want to file. See, US is a very, very interesting country where the spouse and the both the spouses may have different interests, they have different incomes, they manage their money differently, they live together, and they are total different entity. Unlike India, where we have a different kind of culture, but out here it's a different culture. Many people have walked into my office who want to file returns separately, even though they are not all that. And people also separate here quite comfortably, without creating much of ruckus. So we have separate rates for capital gains, for sale of stocks, property. You must have heard the term of short term and long term. Short term is 1 year and less than 1 year. Long term is more than 1 year. So different tax rates apply for that. Rahul, can we move further? And how am I doing on time? 11:14. Okay.
We should be good.
Yes, fine. So now, let me talk about a few tax planning tips. So when is that, one fundamental question is, when do you want to pay your taxes? Do you want to pay it now or do you want to pay it later when you retire? So you have 2 essential retirement plans, which is known as IRA versus Roth. In IRA, you get the deduction now, but when you get it back, after a particular period, then on the distribution, you pay taxes. So you don't pay now, you get a deduction now. Supposing you're in a very high tax bracket, so you might lower it now. And when you retire, because you would be on a lower tax bracket, so you might prefer to pay taxes that time. It's again your own decision. You must look at it from your own life situation point of view. So go for one of the 2, IRA, or you go for Roth. And I would think for Indians particularly, there are a certain wealth building plan. I think I have a slide there. So But I'd like to say one or two things. The lifespans are increasing. And as I shared with you that if you live till 2045, you may not die. That is perhaps overstating the case, but I wouldn't be surprised, if people are living till 125, 150, and it will bring in, its own challenges. And I encourage you to listen to a talk by Samantha Mitra, a woman in California. Rahul, are you aware of her?
No, but I have heard of some other things which people are saying about this.
My goodness, Samantha's talk I heard. What a woman she is! She is fantastic. She's an. They're two beautiful talks. So the life is going to be different, in time to come. All our, ideas are going to break, shatter. All our cultural constraint, cultural baggage, shatter. We have to look at life in a different way. And those of you who are in here in USA, you're already seeing that kind of culture here. So the old culture, the old ideas are not going to work. Because imagine now you live 125, you retire at 65, what do you do? Your long life. So many problems. Another skill to do, you can't remain, you know, without any skill, you can't remain without any work. You have to have hobbies, you should be able to engage, a whole lot of things actually.
Yeah, they
Google out Shamanta Mitra. She's a wonderful woman to hear. A Bengali woman married to an American guy. Fantastic. And there are
yeah,
lots of Indian doing extremely well in USA. That is very encouraging to me. Okay, Rahul, let's next one.
yeah. Before that, there was a saying that, hey, there is a good news and bad news. Good news is you're going to live longer. Bad news is you're going to live longer and you won't have any savings.
You have to plan for it.
Yeah.
Savings is essential. I have put down some savings here in which I forgot to bring 5 to 9. I will talk about 5 to 9 a little later. But saving, there are restrictions. You can't save, as much as you want. There are a certain maximum limit to which you can contribute. Similarly, you can't take out the money whenever you want. So distribution also, there are constraints. A certain age group only you can uh, take the money out. Then there are penalty if you take out money earlier. And also, you cannot say, I won't take the distribution at all. You have to take the distribution. So these are the difficulties. Uh, the government is not willing to take your responsibility throughout your life. You manage your own fund. One good thing about US, I found that even though you are contributing to all these funds, you still have a choice where to put your money. That's a fantastic proposition to me. You can choose a fund. It's a self-directed thing, investment. So there are actually a whole lot of subjects on this. I'm not really an expert on it, but I do have interest. Now that I'm interested in taxes, now that it interests me a lot to help out people to manage funds. I mean, I don't have too much to manage, but many of you guys, I'm sure, are pretty rich guys. Okay, now next. So as I mentioned, applicable for citizens and resident aliens. Alien is a typical term which I learned only when I came to US. I did not know this term. Alien is someone who's not citizen. Yeah, that's how IRL refers. So report global income, get credit for taxes paid in foreign country. Now, this is, I must tell you, many of people are not aware. You have to file FBAR if you have more than $10,000 of financial assets. Please understand it is financial assets, which is either mutual fund investment, stock investment, or money lying in a bank. It must be a financial asset, not real estate. At any point of time, if you have more than $10,000 during the year, you're supposed to file it. And this filing is not difficult at all. All of you can do it yourself. I have done it for quite a few people. I do it every year. 8938 is literally not known to. And someone said 15 March is the last date for that. No, FBAR is 15th April, the same day. You have the laws with regards to extension and things like that, which maybe that we will cover it later on. I'm trying to cover the whole code as I can see it from my viewpoint. My standpoint is more or less your standpoint. My first 5-year tax returns were filed by somebody in Texas while I was in Houston. He was in Dallas. And there's an Indian guy from Chennai who used to file it. and then he would talk to me on phone, and we were in a much better dialogue. I mean, I could understand much better. But when I moved to New York, that connection actually blew. And because New York taxes are different, I forgot to mention that income tax in USA, state laws are different, federal laws are different. In New York, if you live in New York City, the laws are different. If you live in Yonker, the laws are different. If you live in California, the laws are different. If you live in Florida, I think they don't have taxes at all, state taxes. So it's a very complex code, friend. Don't think that you can ever, totally get to know it. I've seen a lot of IT guys, IT, you call them geeks.
Yeah.
So, they can do just about everything. And once you get used to return, you know how to file it. So many people can do it, but yet once in a while, getting a return check when a new situation has arisen, then you should be able to figure it out. So now 8938, if you're unmarried and if you have $200,000 of financial assets or 300,000 of financial assets at any point of time,
You
two
mean
hundred
foreign,
thousand
right?
dollars if on 31st of December,
You mean foreign assets?
it's again financial assets.
Yeah, yeah, but foreign, right? Within US,
No,
you're
not in US. Nothing
yeah,
to do. It's in foreign.
yeah,
It's in foreign. We are reporting the foreign thing. Say,
right.
let's say you have stocks, or you have your bank accounts. Any time point of time, 31st December, if you have 200,000, most of you guys are married. So if you have 400,000 on the last day, or you have 500,000 at any point of time during the year. So these two, please adhere to it. Not many people are aware of it. I know many people, and at least one guy wanted me to file a representation to IRS. You can file and you can to represent. And I refused to file it. I said, look, this is going to be for the first time, though I'm good at presenting my case, but I won't do it. And I said, I will ask my partners. So that time I was partnering a company who had a tax attorney, Joshua. I can't forget that guy. He's a fantastic. Even Joshua refused. He said, sorry, I'm not going to do it. So uh, if you want to do it yourself, you're qualified and you can face IRS, nothing like it. You do it yourself. But sometimes, if you can commit a mistake, then finding the right guy to do it for you. So that is where I find my marriage to H&R blocks fruitful to me. I feel that there are something like 30, 40,000, maybe 50,000 tax pros, and you have all variety of tax pros. I can put a question to the community and somebody other would know it if I don't know it. So you have H&R block in India. I am in touch with the one who heads the Hyderabad office, and there is one office in Mumbai. You have a fairly big center in Kerala. So H&R block does have some presence in India, and I was keen to actually build on that if I can find my way through. So let's move to the next one. So as I said, that you have two types of deduction: standard, which is based on age, filing status, and your physical condition. Then you have itemized, in which if you have large medical expenses, it is better to go for itemized. Though again, what kind of credit you get is subject to various laws and various uh, you know constraints, and we cannot discuss that in this presentation. Then mortgage interest, uh, then your taxes that you paid to state real estate taxes and all, your charity contributions, and your disasters. There are several disasters which happen here. If there is a federal disaster, then you can claim the losses that you've incurred in disaster. So when that happens, you go for itemized deduction process. Otherwise, you go for standard. Whichever is the better, you can choose one. There is no restriction. Only thing is that if you and your wife or spouse are filing separately, if she itemizes, then you must itemize. That is the only restriction which is there. Okay, Rahul. So as I was talking about, you have two routes available to you. I mean, you have foreign income exclusion and you have a foreign tax credit. Again, in your case, what is more beneficial to you or what applies to you depends upon conditions which apply to you. There are, several conditions where, you can go for foreign income exclusion, and there are certain conditions where, you cannot go for foreign income exclusion, and you must go for foreign tax credit. Like, for example, I pay something like $1,800 foreign tax, but I'm able to get only 840. I'm not able to get the full money. It's not $1 against $1. So the laws are pretty complex, and filling up, filling up 1116 was a matter of challenge to me. It took me quite a bit of time to understand, even though I knew conceptually what is happening. One thing I must share with you guys is that you don't file taxes, manually. You just can't do it. So you do it with software. Software has its own implications. Software is a kind of a language. That language you must understand. If you don't understand that language, then you just can't interact with the software. So much of the learning that we do here is understanding, the software. So let's move further. So I mentioned here net investment income and alternate minimum tax. I'm not going to deal with it in detail. I believe only 0.1% of people here in US pay alternate minimum tax, and net investment income is also eligible under certain conditions where they want that the people who are making good amount of money should pay at least some taxes. So Rahul, we can move further. Now this has started from this year only, business information report. If you guys are doing any business on the side or doing any business, you are required to report it. And one thing I could also say that if you're running your own business, then take enough wages. See, you could there are basically 4 or 5 kinds of businesses. I think I have a slide there. Maybe we'll take it later on. Yeah. Otherwise, I'll get back to this point later on. Let's move. So I felt some, I actually have an empathy for all the Indians, because you have to buy your own house. Most of the American guys, they're able to get their house, in the form of gift. They've got it from their dad. They got it from, their grandparents. But here, we are here, barring, when our parents came in here, and they gifted us the house. But most of us are building ourselves. In my case, I'm very lucky, that my son gifted me a house. I didn't have to buy one. He just paid off, full one slot. So I'm lucky, but not many parents are lucky that way. Not many Indian parents who come here at the kind of age I came in. They are actually, they can't work, they can't drive, they can't do anything actually. So they're in a situation they get bored. Luckily, I was able to manage myself well, and my son bought me a house. I live in a great location. So many of you will have to save for your residence. This is the great debate that goes on whether you should buy a house or whether you should rent it. And I am actually in this debate with my son-in-law, who's living in Kuala Lumpur. We've been having a great debate, and we've been debating whether to put money into stocks and let the stocks grow and then buy a house is a good strategy, or buying a house now is a good strategy. According to me, I'm an old-time thinker. Buying a house now is a good strategy. I built my house in India when I was just about 28. In the Indian Air Force, I was working there. At 28, I had my own house. So, and also you have to save for retirement. That's becoming very critical because the lives are going to be longer. Very, very long. You have to have hobbies, you have to have income. And that way, US, I find that retirees are very, very, they lead very interesting life. My bridge partner is a 90-year-old woman. I play bridge with her every Monday. And I find she is so well off. My neighbors, my neighbor is an 80-year-old nurse. She's so well off, she can live all by herself. She has enough money for Social Security that way. Unfortunately, in India, we don't have Social Security, and we have that fear, India still has the fear of survival, we are not assured of our old age income. And Indian as a society is also becoming very tough. Many old people are living now by themselves. And at least in defense, I find now there are very good localities, communities where you have these retirement homes. But here, the retirement home, people living in a location where there are a lot of retirees, they can live life and either in solitude or in community. I wrote an article which got published here, living in solitude or community. It's your choice is yours. So for me, I find that this is something which I couldn't have got in India. I mean, even though I have huge amount of friends, my colleagues in defense are large in number. So you have to take care of healthcare expenses which are going up. Saving for retirement is essential. Buy a house. We can discuss this topic later on. And 5 to 9 college education is you save for your kid, because most of we Indians, I find that we are obsessed with making sure that our kids do well and they get the full college education, unlike the American guys. I have a colleague, she is uh, a black father and a Mexican mom. She's just 22-year-old, and she wouldn't want to take the loan because paying loan is such a tough thing. So I think saving for 5 to 9 for your kid to go to education, and education is very expensive, very very expensive. Here I can talk about some of the HR benefits. We have software in which we can do some simulation, what if simulation. What if you do this? What if you do that? How will it impact your taxes? We have a product known as Peace of Mind, where we sort of give you a guarantee that if we commit mistakes in inputting the data, or if we interpreted the IRS laws differently, then we cover the taxes up to $6,000. There is a small fee for it, and if you're well-to-do and if you have complex situations, you may think of going for Peace of Mind. And we have another situation where we get a fee from refund. Like you don't pay the upfront fee. And Rahul would ask me about the rebates discount. I'll deal with that question later on. I'm keen that some of you guys could make use of what I could offer to you. Okay, next one. So this is about tax law, the applicability. I think we have all credits are eligible if you are a US citizen or resident. There is no difference. You have all the credits which go to a US citizen. Non-residents, you pay taxes on US related income only. There is a very interesting test known as substantial stay criteria. So non-residents can use this criteria, and then if they meet this particular criteria, 1/3 of the, it's not PF, all days in current year, 1/3 of the days in previous year, 1/6 of the days in earlier to previous year. If sum is above 183, then you are treated as a resident. But I read somewhere that all people, this treaty between India and US is a fairly interesting treaty. It's a good treaty which avoids double taxation. It's a double taxation avoidance treaty. It's a very complex treaty to go through some 45, 50 pages. It's a marathon task. So only when you're dealing with that subject, it has taken me 4 years to get some hang of the US system, tax system. Yeah, Rahul. So most of you have this issue. You have property which you want to sell in India. Many of you have. There are several questions. I have got this, and let me tell you, in no uncertain terms, you are supposed to pay capital gain taxes in India and also in USA, as the law is applicable there, as the law is applicable here. You can get credit for whatever taxes you paid in India. You don't have to pay, whatever capital gain you have paid there. You can get credit for that. And one thing that not many people have asked the question, Maziz actually sold his primary residence in India. He could have got capital gain, benefit. I don't know whether he did it. He invested money somewhere else, as far as I know. But you get this, in the US, you have this this relief. If you sell your primary residence, subject to certain conditions. I'm not dealing with this condition right now. Subject to some conditions, you get this relief. Next one. So there are a couple of questions which I asked. One question about if you have obtained stocks using stock option. Well, there is no damn difference whether you, whichever way you get your stocks, you get it gifted, inherited, you get stock option, you have a base rate, you have a, when you sell it, you have a capital gain, you pay there, you pay here. So nothing, there is no such idea. Then the real estate again, you pay taxes. And Rahul, there is no like exchange transfer feasible under section 1031. I searched the whole thing. I'm happy that you asked me this question. I did not know about this. So I looked for it. I posed this question to my community also. So this is an education which I received because I'm delivering stock. So therefore, I feel grateful that you guys have given me a chance to speak to you all. Some of the questions that honestly speaking, has helped me. Okay, next one. This is a question, I've been hesitant to say, and I had told Rahul very, very clearly that I'm not here for a hobby talk. I'm here for a professional talk.
Yeah.
Hobby talk, I'm not here. I'm sorry about it.
Mhm.
So I'm here for a business talk. It's a business for me. I mean, I'm trying to learn more. There is no end to it of learning, and it's a huge complex thing. A lot of people need these services. I would like to charge for it, but not as much. I have sympathy. I might donate some money to to NIT Raipur. So right now I am subject to HR block norms. They put some restriction. In fact, these guys made me surrender my EFIN. I had a EFIN myself. I could file anybody's return. I had the EFIN with IRS. In fact, I had even the certifying agent license, which I've never used so far. No one ever came to me. Those of people who don't have social security, if they want to file their tax returns, they will, even living here illegally. Even if you're an illegal resident, you can pay taxes. You need to have an ITIN. So I had this license. Let me tell you, IRS has treated me absolutely no unfair means. I got everything that was due from them. So as I mentioned, I have some restriction, but I mentioned to my district manager, I said, look, this is one area where it's feasible for me and I'd like to work with them. I'm not keen to work. I'm keen to work only with certain kind of US client, not all. Now, let's look at this. I'm looking at the possibility of, better rates, better quality, similar quality. I want to retain my connection with HR block or with some other major tax, company. And I can offer you Indian taxes, which can be handled because my younger brother is a CA in my family in India. There are quite a few CAs, and so it's feasible to take care of that. If you have difficulty there, we can take care of it. Okay, next one.
Oh, I think that's it probably.
Oh my goodness! So I've sent you a wrong thing. There are four more. There are four more slides.
Oh,
The wrong one.
yeah.
In which I have tried to, address some of the questions. But I guess, what is the time now? Are we at 10:45?
Yeah, we are close to that. And we have some questions. I think Vibhuti Verma sir has raised a hand.
Yeah. Let's have the question.
Why don't we?
Yeah, thanks, Rahul, and thanks, Subhash. It was really illuminating talk. I have a very basic question. I came from Singapore 1.5 years back to US because my son is here, and I kept working from home for the Singapore job. And then while I'm here, I applied for green card, which I got last year, August.
Okay.
So my question is, do I have to file income tax for 2023 because I got the green card only in August 2023?
Yeah, your case is a typical case, and that has to be, exact dates have to be known, whether you qualify for that, substantial presence test. That has to be seen. But you're qualifying for the green card. So as far as I know, it's one of the two, because you already have got a green card. So, but yet I would not want to attempt, an immediate answer. I would want to look at the figures, look at the case, check with you. But you mentioned to me, that your son is a CPA, so let him handle it. One of the reasons why, let me say, one of the reasons I'm discouraging you to come to me is
Yeah.
this. See, California has different tax laws, and California requires the tax pros to be registered with them.
Okay.
So I did a course with a CTEC approved by California. I do have a PTIN of my own, so I meet those conditions. But there is one requirement for me to have a bond, insurance bond of $5,000, which I don't have.
I see.
So I asked my HNRK, you guys have, would you cover me for this? But I can get you filed up by somebody. I can do that because somebody or other would have that. And your case is an interesting case for me to know, because I always like to know these tax. You don't learn taxes by reading. You do taxes by doing.
Yeah.
So all
Okay.
you Google guys, don't think that you can learn taxes by reading. You can do taxes. You can learn taxes only by doing it. That
Right.
is, I'm a firm conviction. I've learned the hard way. Because we Indians have this habit of that we can do all. We are masters of, But there's one good thing I've learned here, that people say, look, this is what I know, this is what I've been doing, this is what I can do, this is what I can't do.
Okay, Subhash, in that case, I will reach out separately.
Yeah, if you reach out to me separately, ask your son, and let me tell you, all CPAs can't handle taxes.
Yeah, exactly. That's why I will
There are many
go
CPAs
through.
that-
I will
many
go
CPAs
through the
that
professional.
they can't, and many Indian tax professionals also cannot handle all, because
Sure.
they have one man setup, cannot. See, you here the idea is that you have HR block has 2,700 permanent employees, 70,000 are temporary employees. I admire these guys, how they can recruit performance alone, train them, they go out, train them, they go out.
Yeah.
So any other question?
Yeah. And let me add one more thing about I had to use it in 93 when I came. So I was told that when you are here for the first year,
Yes.
and you have lived less than 183 days,
Yes.
you can use something called first year choice.
Yes.
What happens there is that if you're going to be here in the next year for more than 183 days,
Yeah.
then you can choose the previous year as a resident.
Yeah.
Very complicated. And in fact, I had to go to H&R Block's international division, and
Yes.
they helped me with that.
Let me tell you, around 90% of tax pros can't answer this question,
Yeah.
because they have never raised a situation like this.
Yeah.
And you only go to a particular I mean, so many forms. My goodness, you asked me a question. For the first time I found there is a form number 3574.
Act of God.
There is so many forms which I was not aware of it. Your this particular talk actually, it made me go through. So and then knowing tax in concept terms and being able to put it onto the software.
Yeah.
So you need to understand the software and the interface between the two. There is the software, you have the body of knowledge, IRS, then you have a software, and then that's where you are as a tax pro, and then you have a client. So I mean, I would not like to comment on this. I mean, you are an expert in many ways, so I can't say.
No, I just explaining my experience of it.
I have empathy. I understand it totally.
Arun was asking a question. Arun, can you unmute and ask?
Yeah. Thank you, sir. Fantastic information. A lot new things to learn. So thank you for that. So I have one question on the mutual fund that is purchased in India. And I learned this recently last week, that you'll have to file taxes on the unrealized gains if the mutual fund was purchased in India.
Have they sent
How
you
does that work?
Yeah, have they sent you any such information?
No. But I was reading as well. So there
Has
is
the
something
money
like
come to you? Has the money come to you?
no, it is on unrealized gains. So what you do is, and it may be wrong, but that guy was telling me with conviction that you have to report the NAV from 1st of January and then the NAV on 31st of December. Whatever is the difference, even if it is unrealized, you pay taxes. So that is one choice. The other choice is you may defer it, but then you have to pay taxes and interest when it is realized.
No, yeah. Please.
And it is called like make to market or something like that. That's a term called make to market.
Or mark to market.
Yeah,
Mark to market. Sorry, mark to market.
there is a provision that like property exchanges, it might fit into that. Wise exchanges. But I think you have to report it. On the reporting, there is no two doubt about it. And is there any tax being claimed when they give you, dividend out there? What is the Indian law?
No,
in
there
this
is no
regard?
payout.
There
No,
is
there's no payout right now. No payout. It is, I think, reinvested.
So
there is no payout.
Yeah, in this case, but let me, since it's a very specific question and it deserves a very specific answer. So conceptually speaking, I don't think, but let me check this and I'll come back to you on this issue.
Okay.
But I would request you if you can put this question in terms of a mail to me.
Yeah.
I
Then
will do
I
that.
think I'll be able to.
Yeah.
And just give me specific data, so let me handle it. And you see, I have one advantage. I'll put it, your thing on my return, on my software and sheet. What if I'll apply? What if, guys? I have.
I think offline
gives you a second look.
Yeah.
Let me say this: H&R block gives you a second look option. That you do your tax return somewhere, you come to me for a second look. I don't charge you. I give you second look free. It's only when I save you taxes I charge you.
Right.
Okay.
And sir, you said 1031 exchange doesn't apply, right? For sale of property in India?
No.
Yeah. I think offline is better because of if there is any personal information, because this is recorded and it's going to be put on the web. So
I stand by every word I spoke, Rahul. I stand
and sir,
by
one more question.
Yeah.
Just one suggestion, Rahul sir. Arun sir, excuse me. Can we stop recording right here, because I think it is anyway going to go public, right?
yeah. So let me do this. Let me stop recording and then we can continue.
Okay.
And